Federal Reserve Governors Yellen and Dudley are both out with comments on concerns of the economy and employment. Why are they talking about the good data points that we're seeing out there?
Well, I mean, I think that they're saying, but there's been a consistent drumbeat here, which is that, look, if things get better, we'll readjust. I mean, one of the things I don't like to do is make a lot out of nothing. And I think this whole, QE3, Bernanke, everyone tells you that's why the stock market's moving up. No, the stock market moves up on earnings, okay, and discounting those earnings. And you can use a low discount rate because the Fed keeps the interest rates low possible, but there's not a lot of demand for money, so they're not keeping the long end down as much as I think people think it is. Here's what I say. They're using common sense. If the economy gets worse, we're going to be there to help. If it gets better, you don't need us. And I frankly want it to get better. There's a lot of people who seem to think that we want it worse so that Bernanke can keep working his magic. That's not the way the stock market works. So I don't mind these comments, which are just basically saying, listen, we're there if you need us. That's what the adults would say. And Bernanke's been the adult. Yellen obviously a little bit softer because last week Bernanke, his thoughts jarred people. I was watching some commentary this morning on CNBC, and the whole perception just point blank is, look, the only reason why this market's up is because of the liquidity. And that's just, I'm a stock guy, and I always hate it when I hear these macro guys tell me about my own stock market. The stock market is not valuing earnings very highly, and the earnings are doing quite well. I look at Sherwin-Williams, and I look at Tractor Supply this morning, and I look at Titan Machinery, and I say, geez, there's something going on in this country that's better than expected. I do not look at Bernanke and have him tell me, because frankly, I would never have caught any of the rally if I had just listened to Bernanke. People who do lazy thinking just listen to Bernanke. People who do homework buy stocks that go higher.
So you think the market might get a little more comfortable with things once Q1 earnings come out? Like you said, we're already
I think the earnings are going to be good. We've seen a number of pre-announcements. Typically when things are weak, we see pre-announcements to the downside, not to the upside. But no one's making that connection. I think there's been I was listening to some guy talk the garbage of risk on, risk off this morning, and I just said, oh, geez. All that does is obfuscate people who are trying to make money in the market. They don't want to know risk on, risk off, which means nothing, or else I would have been using it. I didn't go to college to get stupid. But I think that when you look at what is happening in the real world with individual companies, you recognize that it's earnings, okay, and the economy versus earnings in the stock market versus the economy and versus macro. And right now, earnings and the stock market are in control.
So do your homework and you can make some money.
Thank you. This market is fueled
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to